Hey everybody, Mike Banner here for our next edition of 62 Who Knew, the retirement platform that helps everybody get to this point of life and then the next 30 years. I am so excited about today's show. I know I say that on every show, but this one is close to my heart. This is a show about reverse mortgages, which is what I have been addicted, obsessed. It depends who you speak to, whether they like me or not. If they like me, they say obsessed. If they don't like me, they say addicted to reverse mortgages for the last 20 years. And rightfully so, because it is a staggering product that is surrounded by so much misinformation and half-truths. And those misinformation and half-truths stop this great industry from helping not hundreds of thousands and not millions, tens of millions of seniors. And we're going to talk about a few things about reverse mortgages today. And on our show, we have three incredible national experts. First, we have Mr. Shannon Hicks. This is his second time here today. Shannon is the commentator and founder at HECMWorld.com, the #1 blog/podcast and source of information in the reverse mortgage universe, and co-founder of the software and service company Reverse Focus, which helps thousands of reverse mortgage professionals do what they do. Shannon has played a pivotal role in reshaping the conversation around reverse mortgages on a national level. His unique perspectives and deep understanding of the industry have not only educated countless readers, but has also contributed to introducing practical strategies utilizing housing wealth during retirement. That's right, people. Your equity is housing wealth. Two words you should get used to. We are also being joined, I'm going to skip over to the far left, to Mr. Jim Davidson. Jim and I don't know each other. This is our first time meeting, but he is a veteran of the reverse mortgage business. Shannon was nice enough to introduce him to 62 Who Knew and I, because he is not only a great advocate of the reverse mortgage world, but he also believes, as I do, that the purchase reverse mortgage is the sleeping giant of the senior real estate industry. And we are going to discuss today what a lot of reverse mortgage people don't want to discuss, which is why the reverse mortgage world has failed so miserably on getting this incredible product out there to the 2 million plus real estate agents. And then, of course, we have a mentor, a friend, my boss, actually, in American Pacific Mortgage, Mr. John Russo, a 35-year veteran of the traditional mortgage world. I'm proud to say I'm teaching him a little about reverse this last 12 to 18 months, and he's doing a lot of referrals with me. And we just had 3 great classes, one just 2 days ago in Orange City. It's a little, east of Orlando. What a great class that was. And you're here, John, not just because of your expertise, but I don't know if anybody other than you may be able to give a better perspective of why the traditional mortgage world can't seem to wrap their arms around this great product. The great company we work for, and it is a great company, American Pacific Mortgage, 9th largest independent lender in the country, with a group of professionals in California that are second to none in their expertise in reverse mortgages. I mean, we close reverse mortgages like this, traditional and purchase. They're wonderful people, but we have 1,600 loan officers in this company. And I'm not going to mention our volume because I don't want to bother them or annoy them or, quite frankly, piss them off. I guess that would be the better way to put it. But we should be doing 10 times more. And it's not for lack of trying on their part. It's because the traditional loan officer goes, oh, yeah, reverse mortgages. I don't know if I want to get involved with that. No. You don't want to help a 62-year-old client have the best possible life. We'll get into that. Shannon, you first, my friend. Thank you for coming back. What are you seeing the last 2 to 3 months? Rates have continued to either stay high, they go down, they go up. Our tiers, which to realtors and mortgage people in the real world, what we call tiers is loan to value, is still ridiculously low. People between 62 and 72 years old were lending about 30% of the value of their home, which disqualifies so many people. But you do more on this than I'll ever do. What are you seeing the last couple of months from the thousands of people that you help, in your line of work.
No, good to be back. And, I do get a lot of anecdotal reports from the subscribers to HECMWorld.com and our software clients. What's strange is in my conversations with the company that tracks the data for reverse mortgages, Reverse Market Insight, I was speaking to John McHugh, and strangely, first time reverse mortgages, that means they're not purchase reverse mortgages. They're not a refinance of an existing mortgage. So we're talking net new reverse mortgage borrowers. The number of those really doesn't seem to be heavily impacted by the interest rates. Strangely, so if you look at the chart, they kind of move together. And so I agree that to use the analogy of a sandwich, that you're getting a smaller sandwich on a bigger plate and you're paying more for it, right? With the reverse mortgage. And that's primarily due to the principal limit factors. And just for those watching, that's like, what does that mean? It's basically the percentage of money that a homeowner may be eligible for based on their age and the interest rate at the beginning of the loan, just to put it simply. So that is creating some friction. The good news is people can still get these loans done because home values are still almost near their peak. I don't think that's going to be the case in many parts of the country much longer, but so there's still a lot of equity out there. So we're not seeing real growth, I would say, in the industry as far as our numbers, but I say that we're stabilized right now.
I'm just going to add in before I go to Jim for his take on that. We are, and I know it's going to sound negative. I'm going to say negative things today, and I don't mean it. I say it because I love reverse mortgages. We are stable at the bottom of the pit. Our volume has gone down 17 years in a row since our record year of 2009. The only exception to that was during COVID when the whole world refied at 3%. If you take that year away, and I know when I come on your show, are we going to have John McHugh from Reverse Mortgage Insight?
We'll get him in there if you like. Yeah,
because Reverse Mortgage Insight is the most unprejudiced, unbiased, best source of everything because they don't do reverse mortgages for a living. But if you graft 2009 to 2025 in the reverse mortgage world, other than the refi year, saying that we're stable, is being the one-eyed guy in the room of the blind people. So be that as it may. Yeah. Jim, reverse mortgage person, gray hair. I like reverse mortgage people with gray hair. What's your take on what the hell is happening in our industry? Oh, we're in a coma. The doctor is standing there with the paddles. The nurse is yelling, clear. What do we got to do to wake this patient up?
Well, Michael, first of all, thank you for having me.
Very welcome.
And listening to your open, I'm almost tempted to break out my application and email it to you. and let me get you started. It sounds like you're a good prospect.
I am.
I will tell you. And Shannon doesn't know this, but I'm a rookie in mortgage. I spent 30 plus years in tech. I was all over the planet, primarily at 35,000 feet with a 3-piece suit, competing head up against the IBM company. And so I saw the world from a totally different perspective, and grew up in that world, and came into this really, I wouldn't say by accident. I think it was the hand of God, to be honest with you. I'm 71 years old. I'm a miracle cancer survivor. I own my own home in Hilton Head, the Hilton Head, Savannah, Georgia area, what they call the Georgia Bight. That's where I am. I'm 20 miles from Savannah, and I'm 8 miles to the bridge at Hilton Head Island. So we are, obviously, this area, we're a destination magnet for retirees coming from all over the country and indeed the world. And so I'm a reverse mortgage consumer. I've not only done one to refinance a forward mortgage on this house, but I did a HECM to HECM refi.
Of course you did. Thank you.
I sure did.
A good year.
And so I look at the world the same way you do, Michael. And I've asked Mutual of Omaha, what do we, why is this miracle loan product for retired Americans not doing any better than it does? And, the good news for us at Mutual of Omaha is we're the gorilla in the room.
Yes, you are.
Right. I mean, we do more than anybody, and we dominate the HECM for purchase space. So much so that we've private labeled or private branded it, and we call it the lifestyle home loan. And so I do a lot of them, right? And because my buyers or my borrowers are coming in from all over the country, and they're bringing their retirement savings to Bluffton and Hilton Head, and they're looking for a home to settle in and live in for the rest of their days on the planet, and they can't find anything in their price range. And so this loan product obviously offers them the ability to leverage their purchase dollars. Mm-hmm. And so like the story that appeared in Shannon's magazine, or reverse, whatever it is, Shannon, this was a couple that came from Arizona.
I saw that.
How they found me, I don't know. It's probably Mutual of Omaha's superior search engine optimization. I don't know. But I wound up with them, and they bought $564,000 worth of house, and they wrote a check for $361,000. So that's 35% off.
That's right.
The realtor was paid full commission. The developer that built and sold them the home not only collected full price, but sold a boatload of add-ons or premium extras mm-hmm. that they would not have otherwise sold them. And the client, of course, was able to keep about $150,000 of their own money in retirement savings that they didn't have to spend to have a, quote, paid for house with no mortgage payment. So how you can, that cannot be a win for everybody in the equation is beyond me. The only one that it doesn't win for is a cat named Dave Ramsey, who is probably somebody.
Dave Ramsey.
I keep asking
the Antichrist of the reverse mortgage world, the Darth Vader of the reverse. 1.2 million followers, and I got to give them credit. They are the loyalest people. I think if Dave Ramsey wanted to take over the world, he might have a shot, because I've gone on some of his websites and said, Dave has no idea what he's talking about when it comes to reverse mortgages. You people know that. And I mean, I've been attacked. I don't mean like you shouldn't say that or no, Dave wouldn't lie. This is visceral hatred for anybody that disagrees with Dave Ramsey. So, he may be on the dark side, but he's controlling the force for a while here.
Well, he's a force to be reckoned with, because there's a lot of the misinformation that you talk about, comes from that side of the equation. And that's mm-hmm. what it is. If you take time enough to look at this thing as a retired person with some amount of dollars in your pocket to spend on a new house that you're going to stay in for the remainder of your days, then, this is the biggest no-brainer in the history of Earth.
Yep.
It just
doubt.
is. But again, you got to, the conditions have to be right. It's not for everybody.
No, it isn't. Yeah. Nothing's for everybody. You've spent years building equity in your home, and now it's time to let that equity work for you. The fractional sale of your home equity lets you access the cash you need without taking on additional debt. It is a game-changing tool to help fund retirement, cover healthcare costs, or simply enhance your lifestyle. No monthly payments, no interest, just financial freedom. Turn your biggest asset into your greatest retirement ally through the power of fractional home equity. To learn more about this, go to www.62whoknew.com and check on the Chief's link.
Are you turning 65? Well, if so, the most important decision in your life right now is to determine which Medicare plan you need to be on for your unique changes in life. Are you still working? You on your employer's plan? How about being a snowbird? If so, you need to speak to a Medicare consultant who can help you with your needs. I'm Diane Daniels, and I'm the CEO of Medicare Nation. Go to www.62whoknew.com and click on the Medicare Nation tab. I will give you a free consultation to make sure we find the right plan for your unique needs.
And before we get to John to get the traditional point of view, Shannon and I have been discussing this for a couple of years, and this will be the first time you hear me say it, Jim. I've been looking at it a little different, because convincing a real estate agent who sells 90 to 95% of the homes in this country, realtors sell. They're not FSBOs. They're not for sale by owners. Convincing a real estate agent, and unlike most reverse people, I've been brought up on real estate agents because I'm a regular mortgage person for 40 years whose passion has been reversed for the last 20. But thanks to AP Mortgage and my own company before that, my second passion is veterans. My third passion is self-employed people that don't show their income so we can do bank statement loans. I do all mortgages. My passion is helping seniors. I'm going to say that I've taken a different tack lately, the last year or so, and my H for P business has picked up because it's very hard to look at a real estate agent who's commissioned, like most mortgage people, who has a wife or husband or children, car payment, mortgage payment, kids going to college, and go, I know you have this $650,000 cash deal, but here's what you really should do, because we could save that person $200,000. Now, of course, your cash deal with no appraisal and no closing costs almost is going to turn into an FHA loan, which by federal law, you have to have a home inspection. But you're also going to have an FHA appraisal. And instead of closing in 2 weeks or 10 days on a cash deal, this is about 30 to 45 days. So I think that's been one of the problems of the HECM for purchase, getting realtors to, I'm just going to say it, do the right thing. They are doing the right thing. They're selling a cash deal and they're getting a commission. That's what we all do for a living. I've been looking at it, Jim, you've never heard me say this, is because of inflation being so incredible in your area of Georgia, my area of Florida, John's area of Orlando, and of course Shannon in California, where a Big Mac costs $4,642, let alone a 3-bedroom, 2-bath house. I've been looking at it as cash people coming here, let's say use Florida, with X amount of dollars from their exiting home. And let's say they move to my area of Tampa Bay, and they just made $500,000 on their house in Michigan or Pennsylvania or New Jersey. And they come down and they talk to a realtor and they go, I want a 4-bedroom, 3-bath. I want a pool with a spillover hot tub. And I'd like this to be in a nice neighborhood, but not a house that hasn't been remodeled in 20 years. And that realtor has to look at them and go, what you're describing, I could have sold you for $500,000 6 years ago. But unless you have a time machine, let me show you the 20-year-old house that hasn't been remodeled in 20 years with the pool, with the marsh site that's cracked, and the lawn that hasn't been taken care of, because that's all you're getting. But with the purchase reverse mortgage, we do the math backwards. We can increase that 65-year-old borrower by 40%. We can take that $500,000 cash borrower, turn them into a $700,000 sale, $500,000 down, $200,000 from American Pacific Mortgage, and now we have our 33%. Now we have our loan to value. So I have been pushing the last 2 years that this is that seniors anywhere in the country should not have to settle for less than their dream retirement home simply because houses in Florida have skyrocketed, or North Carolina, or South Carolina, or Georgia, or Orlando. That has been my push with the realtors, because for 15 years I try to convince them to tell that cash buyer to do this. But they have bills to pay. They have children. They have a mortgage payment.
Let me offer you a quick perspective, then I'm going to shut up, but I'll give you a realtor perspective.
Okay.
And I asked the question that you're floating here. I've got a lot of real estate friends, and so it's where I hang out. But they're riding around with a buyer who they think may be loyal enough to them to stay with them through the whole process. But that's not a guarantee.
For sure.
So they're riding around with a he and she couple or whatever. They're showing houses, all this. And the notion of introducing something that, number one, has got a bad connotation, reverse mortgage, is almost a curse word. The notion of floating that word, number one, and then facing a question, as good as the pitch sounds and as compelling as what you've just said is in the scheme of things, that realtor is saying, if they ask me a question that I can't answer, I'm going to look stupid. Right? And I may lose credibility, and I can't afford to lose credibility because I ain't so sure that they're going to stay with me through the process. Okay? So they're just not going to go anywhere where there's any risk.
That is absolutely great perspective, and I 100% agree with it. Yep. Somebody should open up a national school that actually educates realtors and gives them CE credit for learning about the purchase reverse mortgage. Somebody should do that. Wait a minute, somebody did that. That would be me about 10 years ago. So it's all about education. We talk about this all the time, Shannon and I. John, this is an important part of this. Why hasn't the conventional, traditional mortgage world wrapped their arms, and I said this before we went on, their head and their profit and loss statement around getting their hundreds of thousands of mortgage people, millions really, probably down to hundreds of thousands after the recession, to get involved in this? Now, I have a few answers to that, but John, 35 years experience in the traditional world, why?
Let's go back in time to about 11 years ago. I'm going to just draw a correlation between where we are with reverse and where we were with this newborn thing called non-QM in 2014. Right? I was in a presentation, Melbourne, Florida, 47, 48 realtors in the room. We're doing a lunch and learn with one of my loan officers at the time. And I was talking about our company. The company that I was at the time was one of the spearheads in the spearheading the non-QM space. And we had rolled out, right? 2014, you're coming out of the crash, 08, 07, 09. Who didn't in Florida, where I live, have a short sale, foreclosure, deed in lieu, bankruptcy. And it's not obviously exclusive to Florida. And I'm in the room. We're talking about a program called Fresh Start, which was for folks 1 day, 5 days, 6 weeks out of any of those events. And a woman stood up and said, I don't wish to hear about this. This sounds like we're going to repeat the mistakes we made a few years ago. And I said, I appreciate you sharing that feedback with me. What I didn't get to yet is, in the short time that we've been doing these programs, here's the average customer we're doing this for. Here's the average credit score. Here's the average down payment they're putting, right? And so I juxtapose that against our FHA pool, which had a significantly lower credit score, a significantly lower down payment, therefore significantly more risk, higher debt to income ratios, right? And so that was 2014. Here we are in 2025, and I look at my region's pipeline, which at this point is probably in any given month, 40% non-QM.
Yep.
You take that 11 years stretch and ask, what did we do and how did we get there? And there was a very concerted effort in education in the mortgage industry and in the real estate space, right? There's continuing education, right? The whole gamut, right? Companies have embraced it. And obviously we now see, right, great growth in that space. I think the thing that's been missing, right, there are, Jim hit the nail on the head, and Mike, you and I talk about this frequently, especially when we're in our classes, the negative connotation tied to the big, bad, yucky, original, ugly stepsister of today's HECM for purchase, or traditional HECM. We have not overcome that yet. And so it's when we're in a classroom, like we were on Tuesday in Orange City, and we're talking with a group of realtors about, specifically, I'm not sure if you remember the one lady who said, they all come with cash and we close these as cash. And the point is, if they come with a briefcase of $450,000 and it buys them mediocre and it doesn't fulfill the dream of what they want in their retirement, did you really do them a service? Right? You put them in a house. Got it. Check mark. But was it the house that they truly are proud of, that they are going to enjoy every day, or they're going to be looking soon again to buy something else? So how do you take that 450 to something that meets their needs? It's those examples. And I think it's grassroots in those classrooms, 10 on 1, 20 on 1, 50 on 1, where that's where the work is. I take it over to our side of, I look at real estate mortgage as an industry where we share the same space. But on the mortgage side, I read a book a bunch of years ago, Everything I Need to Know I Learned in Kindergarten. And I juxtapose that against everything I know about reverse mortgage I learned from Mike Banner in the last 18 months. I've been doing this forever, and I've made referrals of reverse mortgages here and there to the reverse person who popped in and out of the branch or, supported the region in the past. And the feedback is, yeah, thanks for the referral. It didn't work. Don't really know why. Nobody ever got into the weeds with me. And so, right, I'm a seasoned veteran. I've been a top producer many, many years. And I was never that engaged in the product, not because of the negative connotations. I knew that all of that was gone. I was educated enough to know that. The average mortgage banker, and I've been on a quest alongside you within my world, friends in the industry that don't work for us, friends who do work for us. What are the barriers? And I do think, right, one of them is if I put something out there, there's fear, right? I'm not an expert at this thing, so I didn't feel comfortable talking about bank statement loans when I didn't know how to do a calculation to create the income. Mm-hmm. Then I got better at it and I understood. I didn't feel good about short-term rental, DSCR, cash flow financing until I started doing the calculations, figuring it out, getting my hands in it. And so I've tried to put my hands in a few reverse mortgages now to be able to have a better understanding so that I can explain it more to a consumer and more to a realtor. The average loan officer doesn't, and the average mortgage company treats it like a separate off their department, and it is not integrated in what we do on a daily basis. And it's a shame because we don't bifurcate 62-plus-year-old clients and handle them in a different way, in a different department. We interface with all people at all times. And too many of us are not even generalists in this space. So I believe there's a fundamental lack of education in this space.
I think everything you said is exactly true, but we're going to go backwards just for 60 seconds because of our thousands and thousands of viewers, most of them are consumers. They're not mortgage people. And you did compare this to the non-QM world, and the people on screen know what you meant. Could you tell the consumers the difference between the Fannie Mae fixed 30-year mortgage and the non-QM world?
Absolutely. So we definitely won't teach a continuing education class on this, but right, there are your standard agency products, right? So whether they're backed by, in the secondary market, backed by GSEs, your government-sponsored entities. So we've heard of Fannie Mae, probably Freddie Mac, FHA loans, VA loans, USDA loans. The standard pool of lending available in the secondary market in mortgage in the United States stands alongside here as a product suite, which I would say most people go for. These are fully documented loans. If I'm self-employed and I'm looking for an FHA loan, I'm providing 2 years of tax returns. We're measuring my income from that. If I'm in a type of business where there's an excessive amount of write-offs, for instance, and my bottom line income that I pay taxes on is low, and it's not enough to qualify for a home, we could do a few different things to keep me in an FHA or conventional loan. I can have a cosigner, I can adjoin with my spouse. There are things that we can do to try to overcome those gaps. But if we can't, we have this other side of the house, right? So these are considered the qualified mortgages, QMs, and these are the non-QMs. They don't meet the same standards. These come with alternate documentation methods. So we're looking at bank statements and cash flow deposits. We're looking at 1099s. We're looking at profit and loss statements. So we're trying to get to the bottom line to determine truly, can someone afford to pay this mortgage? But we're using alternative documentation methods to get there. Right. And we've been at it for about 11 years. Right. Because I really would say 2013, 14 is where this all sort of came to light.
Came back.
Yeah. And these are generally very safe loans. They just don't fall into the qualified mortgage bucket.
One of the things that you said that's so right on, and again, Shannon and I have discussed this for so many years. When somebody says, why has the purchase reverse mortgage, failed the industry? My answer has been the same for years now. The purchase reverse mortgage has not failed the industry. The industry failed the purchase reverse mortgage, because one of the things you said was lender participation, going out there, specific things. I mean, for the last 12 years, you can't, if we turned on any TV station now, whether it's a huge mortgage company or an independent or a radio station, you're going to hear, 12 months, we don't even need your tax returns. There was an industry, the conforming industry, that knew it needed to go non-QM, non-conforming to us dinosaurs. They knew they had to do that to survive. Well, the reverse mortgage industry 10 or 12 years ago knew it had to do something to survive. And it didn't do squat. And it still doesn't. They say a couple of thousand reverse mortgage people and, producers, but Shannon, you can say no comment if you want. How many people really make a living in reverse mortgages? Is there a couple of hundred in the country? Is there?
Yeah. There's kind of a newer approach, I think, to trying to generate reverse mortgage volume, where it used to be, hey, we want to bring in the top producers, right? Which is pretty wise if you think the 80-20 principle in sales, right? So
yeah,
80% of your sales force is going to generate 80% of your revenues. Now I'm seeing more of the, inch deep and a mile wide approach, where it's like, hey, if everybody in this huge organization just gives at least one reverse mortgage, then we'll grow. So those are kind of the two camps that we're seeing right now in reverse mortgage lending. There's a lot that can be said about that. I'm not as well versed in the purchase market, but much like the traditional, straightforward reverse mortgage, just someone staying in their home, not even selling, there's a lot that we're missing as an industry in our approach and our engagement as well.
The HECM for purchase, which, as Jim says, is a life changer. It changes people's retirement. It's the last 20, 30 years of their life. I've also found with the real estate agents, that I do have to hit the entrepreneur button, the capitalist button. If I really want to go to the bottom line, I'll say the greed button. My God, you can turn a $500,000 sale into $700,000. You do understand you just increased your commission by 40%. And I have people in my classes who are doing this, and then they go, what did he say? Increase my commission? What did he say?
They wake up.
The real estate world and the mortgage world and the builder world is filled with type A personality people. That's why they're commissioned. And I think we have to start appealing to that personality.
Absolutely.
Yeah,
I mean, from a financial standpoint too, a financial planning standpoint, do you want this older individual or couple to be dumping every penny from the sale of their previous residence into the bricks and mortar of a new home? Because in the future, you don't know if you're going to be able to get that money out unless you sell.
That's right. I get more positive reaction from a room full of financial planners.
Yes.
Than I do from realtors. I mean, realtors are cool.
Yeah.
Oh, yeah, I never knew that. Oh, you didn't lose your house.
Yeah.
Financial planners, exactly what you just said.
Liquidity.
Wait a minute. I got somebody with $1 million and you're telling me they can put up 700,000 and I can take the other 300,000. He's 68 years old. And when he's 80, that 300,000 will be 1.2 million. You're telling me that's what I can do? But again, it gets back to our industry failing to get this message out. And most of our industry, I'm just going to say it, and I know the people that are not in this group, and they watch, so they know I'm not talking about them. It's not 80-20. 99% of the reverse mortgage world is just too lazy to build a referral system with realtors because it's hard. You're right. 80% of them don't even make a living. You have to talk to 10 of them to talk to 2 that make a living. And most of that business is going to be 62 years old and below. This is a niche. It's a staggering niche. It's a niche that grows by 10,000 people a day turning 62 years old in this great country. So it's not this little teeny niche. It's a niche that's ever growing. But I've trained hundreds of reverse mortgage people who say to me at the end of 90 to 120 day period. I spoke to 32 realtors and I haven't got a mortgage yet. I go, I trained you 90 days ago. What are you expecting? Well, when are they going to give me business? Well, when was the last time you spoke to them?
Yeah.
Well, I visited most of them I guess when we finished your class, Mike, about 90 days ago. I said, so you have no contact in the last 90 days?
Yeah.
Well, no, they don't even know who the hell you are. Realtors do business with people they see. So do builders, so do financial planners, people that solicit them, people that email them, people that send videos. And I'll use those words that I hate. 99% of reverse mortgage people are laying around waiting for the phone to ring. I hate these words. For the low-hanging fruit.
Right.
I mean, I know national companies that teach this. The low-hanging fruit. The senior that needs the money. Boy, when he calls, you're going to write them. And that's what they're looking for. And that's why we do an insulting amount of low mortgage volume every month. Because our industry is sitting around waiting for the low-hanging fruit. Jim, I think you have a lot to say. I've seen you leaning forward in your chair on a few of these comments. Go ahead.
Well, again, I come into it as a guy that grew up in a totally different world. And, the notion of running an HP 12C was something that I did in my sleep. Right.
Tell the young viewers what that is. I know what that is. So does Shannon. So does John. Our producer's going, what the hell is that? Because he's 12 years old.
Yeah.
Tell them what it is.
It's a financial calculator.
It's a financial calculator, yeah.
It lets you calculate all the good stuff you got to know to figure out where your solution fits.
To do a Reg Z to you young whippersnappers that none of you know how to do anymore because it's done, by technology. Us guys, we did our Reg Zs on that calculator. We figured our APR ourselves.
That's right.
Like that shit, yeah. Real man stuff. Whoa.
Old school.
I'll tell you this, and this may ruffle feathers
Ruffle them.
This is from the perspective of a guy that came from a different world. But for the past 6 months since the election, and with the focus on Doge and all that has happened at the national level, and Shannon and I've bounced a couple of ideas off of Shannon, and none of it went anywhere. But how in the world? Let me just back up and say this. Part of my frustration as an originator is the minutia that's involved in doing one of these things.
Oh my God, you're so right.
It's ridiculous. Why are you asking a 70-year-old to sign their names 80 places? Right? I mean, we're qualifying.
It's so true.
We're qualifying a buyer or a homeowner we're not qualifying to make a home payment. Okay. So this whole notion about, all of this, low doc, high, all that is just, it's stuff that I'd like to burn in my fire pit.
Yes.
What you want to turn that slope that looks like this in the number of originations. Well, I guess from the screen, it probably, 2010 is up here and 2025 is down here.
Exactly.
And the slope of the numbers that we've done go straight downhill with the exception of that one spike that happened during coronavirus. Right. It goes straight down. If you want to turn that back around and send it back to the moon, deregulate this cotton picking thing. Take the shackles off of the sales guys. And quit making us automate. Let's use auto. What did I do? I did a search on Chat GPT, and the result I came to after about an hour's worth of work is I took the origination process from 6 weeks to 3 weeks. I basically cut it in half, so the time was shrunk by half. And according to Jeff, and I'll share this with Shannon as a takeaway from this call, my point is simply this. This is a very complex loan to originate.
And it shouldn't be.
It shouldn't be.
Yeah, it is easier.
It should be something that I can do on a postcard.
I wouldn't go that far, but it shouldn't be. John has taught me a lot about down payment assistance programs. I thought I knew a lot, but I don't. American Pacific Mortgage has 50 down payment assistance programs available in this country, which is staggering. And I am telling you, as a matter of fact, there is less paperwork for people in their 20s or 30s who have no money. We're getting them a down payment assistance program for 3.5% down and closing costs. And then we're getting them a 96.5% loan to value FHA loan. There is less paperwork in that transaction than there is in a 75-year-old person borrowing $100,000 on a $300,000 house. Mm-hmm. But again, that gets back to the industry turning around and going to HUD, what the hell is going on here? But we're going on 20 years now that I'm frustrated on this. What's the biggest threat to your retirement savings? It's not the stock market. It's the cost of long-term care. Home care, assisted living, or nursing facilities can drain your life savings in just a few short years. That's why long-term care insurance isn't a luxury. It's a necessity. It protects your assets, preserves your independence, and gives your family peace of mind. Don't leave your future to chance. Plan ahead. Protect what you've worked a lifetime to build with long-term care insurance. For more information, go to www.62whoknew.com and click on the long-term care insurance link. Planning for retirement? Your home can be your greatest financial resource. At 62whoknew.com, our mortgage link connects you to expert guidance on reverse mortgages, refinances, traditional home loans, all designed with retirement in mind. Whether you want to eliminate your mortgage payment, do debt consolidation loans, or downsize with confidence, we help you choose the right mortgage for your future. Visit the mortgage link at 62whoknew.com because the right mortgage strategy today can mean a more secure tomorrow.
So we need some help on K Street. I mean, we need some help in Washington on K Street.
Some help on K Street. I like that.
It is a simple.
Well, we don't have the clout. I'm just going to say it. NRMLA, okay, good people, good heart, but NRMLA has no clout.
Yeah.
They never have. It's fun to talk about. It's fun to go to the conventions, which I haven't done in almost a decade. It's fun to go, look, there's 500 people here. Well, there's 1 million mortgage people in the country, actually closer to 1.5 million. 70% of them either work for a mortgage company or a bank that are FHA approved. They're capable of doing FHA loans, which means there is a potential 1 million reverse mortgage originators out there. And you were at the last NRMLA convention, Shannon. I wasn't. How many people were there? I'm getting you in big shit trouble, aren't I?
I think we got close to 300.
Got close to 300. So when you take, when you take away the vendors, the lenders who forced their employees to go, I'm very, very good friends with almost everybody in Mutual of Omaha. And when they were told they were going to the NRMLA convention, they went, are you kidding me? Why? But they went because that's what they were paid to do. When you take away the vendors, the lenders, and the lenders' employees that were forced to go, how many people were there?
Your vendors are going to be talking to about 200 people or so. So
yeah. And if you take, and again, it's just, and I'm not mad at NRMLA because we just don't have the volume or the clout to get to Pay Street, to get to Washington. It's a catch-22. If we were doing a lot of business, people would pay attention. But we don't do a lot of business, so people aren't paying attention. It's the chicken or the egg. There's no way to get around it. The people that hold the most equity in the United States of America are above the age of 62. If we were to tap into that equity, it would do everything to help America be what it's supposed to be. But it never gets done.
Especially in retirement. Especially
but it doesn't get done. Because the most expensive thing about a reverse mortgage is the MI. I mean, let's face it. It's $1 million house. We're lending them $300,000. and there's $20,000 in MI before you even talk about the closing costs in that state. And we wonder why we don't do any mortgages.
Right.
There was actually a bill that said if the proceeds of your reverse mortgage, now I'm going back 2 decades, are being used for long-term care insurance, we'll waive the MI.
Wow.
Because if people have $1 million long-term care insurance policy, they're not making claims on Medicare and Medicaid. There was studies showing how they would save hundreds of billions of dollars if people use their own equity towards long-term care rather than Social Security benefits, Medicare, and Medicaid. Oh my God, this is so great. It never made it past discussion. So I guess what I'm saying, because I'm doing this a lot longer than you, Jim, they know it. What's stopping them? I really don't know. I can't even say it's greed. Nobody's winning by having the reverse mortgage world in a coma.
No,
Seniors are losing. The long-term care insurance world is losing. Medicare and Medicaid is losing. The housing industry is losing by not unleashing the most powerful buying force in America, people 62 and above. Yet, we're not even, I won't even say in the top 10, in the top hundreds of anybody's concern. It's win-win. And again, back to John with the conventional world, you know, we all thought, including me, years ago, that when the big boys went in the reverse mortgage world, now we got it. You know, let's talk, you know, cross country. Oh my God, what a company. 3,500 originators. The great majority of their business is purchase. 3,500 spokesmen to talk about the HECM for purchase. That ain't happening. All right. We got guaranteed rate, a giant like cross country, a great giant. 5,000 loan officers. The great majority of those loan officers do purchase business. You don't want to know how many reverse mortgages guaranteed rate did last month. They'd probably get mad at me.
Just a quick statement, Mike, to show, just to kind of juxtapose our market in the United States, reverse mortgage market. You know that Australia, they call it a home equity access scheme. You would never use that word here in the US. They have a backlog of 16,000 reverse mortgage applications. So
wow.
This is the federal program there in Australia down under. The interest rates are insanely low, about 3.95%. But it just shows you the power of when a government gets behind a program like this. And while ours has been, you know, designed and, you know, supported and insured by the government in some respect, right? It's never really gotten behind the program. And I think I agree that increases our liability in entitlements unnecessarily.
The HECM release program, equity release, which is what Canada calls it.
Yeah.
They do more than us.
Yeah.
It's Canada.
Yeah.
I mean, I love Canada. They're the nicest people in the world, but it's like America on a Valium. I mean, they're just so calm and so polite. They do more than us.
Right.
What are we doing here that we can't help the quality of lives of all these people and our economy and their children, the sandwich generation? Now, I think one of the things also that is, you know, we've talked about for years, whoever invented this needs to be shot. We also talk a different language. You talk about why thousands of conventional loan officers aren't into this. All right? The whole world uses 1 or 2 mortgage programs to do their mortgages. We use a different mortgage program, 1 or 2, that is a totally different world. If you don't know how to use them and you don't use them every week or every 2 weeks, if you're going to be a traditional mortgage person and you're going to try to go on to quantum or reverse vision once every 6 months, you might as well be Stevie Wonder.
No, you ain't gonna,
it ain't happening. Now, we don't have loan to values. We have tiers. We don't have mortgage amounts. We have UPBs, unpaid principal balances, which, by the way, is different than your principal balance because we could be lending you this, but you're only accessing this. We don't do appraised values, although we do use that term. We use MCAs. So you do have 1.5 million mortgage professionals going, what the hell is a tier? What does MCA mean? What the hell is, I mean, why can't we even use the same language? Which, again, is not going to change. I've been asking this for 20 years. So it's almost like the reverse world has gone out of its way to not be part of the real mortgage world.
We
And
almost get a
have to
secret
be.
handshake.
Yeah, it's the secret handshake. Woo!
I'm
John?
curious what John has to say on that because,
Yeah.
I mean, how can we do work better with traditional mortgage originators?
Yeah. So that piece for me, it really goes back to the education, right? I have to learn a different vocabulary. If we, again, sort of compare this to the non-qualified mortgage revolution that's occurred in the last 10, 11 years, we speak the same language. We're calculating DTI, debt to income. We have LTVs, loan to value. We're looking at, a tri-merge credit bureau report, 3 credit scores. It's the same process with some minor differences. Reverse is it's French and Romanian, right? It's you have to learn a different language. Education can cure that. It won't be for everybody, right? But I think, a few things that I've been thinking about and chatting with some loan officers on. Mike, in your classes, you usually draw a reference to the number of humans who are turning 62 on a daily basis in our country.
Yep, 10,000 a day.
It's about the same number of millennials turning 30. Good house buying age, right?
I never knew that.
So we have, and when I look again, you mentioned earlier, right? Our company does a tremendous job with offering down payment assistance for highly qualified buyers who just don't have that down payment. Affordability has been challenged across the country for the last few years in this rate environment that we found ourselves in. Those down payment assistance programs, dozens of them being born every month, we're serving that population. The same number of people are becoming eligible for this other language animal, and we're not serving that population, right? That for me is that there's a mission there that I just, again, I think it's whether there's some larger initiative that happens or it's grassroots getting out there and doing this loan officer to loan officer to realtor, something's got to give. But
It's got to be the larger initiative. We've been trying grassroots, Shannon and I could name 20 other people like this that have been trying grassroots for 20 years. And when we have discussions in private, go, what the hell are we still doing this for? What the hell is going on here? Yeah. It's got to be something huge. I mean, look at the Tom Selleck commercials. I love those commercials. I think those are some of the best commercials. They beat the hell out of the Fonzie commercial. The guy from Law and Order had a commercial for a while that was decent, but it wasn't that good. Robert Wagner, who's, let's face it, is the grandfather. Robert Wagner brought reverse mortgages to the country. I remember in those days, if I was flying somewhere or doing a presentation and somebody would go, literally, I mean, this would happen hundreds of times. What do you do for a living? I do reverse mortgages. And they would look at me and go, that Robert Wagner thing, too. I mean, he was the voice for us. He brought us to America, I think. But think about those commercials. He would walk out in front of a multi-million-dollar house. I don't know if you remember those commercials. He would be standing in front of a beautiful, some sort of antique collector car that's probably worth 6 figures. And I loved Robert Wagner. I really did. And all the shows he did. And I loved him as DiNozzo's father and NCIS. I mean, the guy's just a legend, okay? You got that one small little personality flaw that he probably killed his wife. But we won't discuss that. That's a different thing. And young people won't even get that reference. But be that as it may, he would come out in front of this multi-million-dollar house in this antique car and go, I know your problems. You're short on cash. We know what you need to do. You don't know problems. You have a 7-figure salary just to do that frickin' commercial. Tom Selleck does it right. AAG before they went out of business, and now FAR has taken over those commercials. These were great companies, that fell victim to our economy and what was happening in Wall Street with reverse mortgage securities. These are great companies, FAR and AAG. And those commercials, and Tom Selleck is an excellent spokesman for us. So why haven't one of the giants, instead of Tom talking about equity rich, cash poor, paying your bills, when is some giant going to come out with the red and white balloon behind them and go, Remax? How would you like to take every 62-year-old cash buyer you ever had and increase their purchasing power by 40%? And they still won't have a principal and interest payment for as long as they live in that home. We wouldn't be able to keep up with the phone calls for HECM purchases. When is somebody going to come out with a Keller Williams person or a Century right standing next to them and have a Keller Williams or a Remax person or a Century 21 or a Merrill Lynch go, I really can't believe this. I never even knew there was a HECM for purchase, because nobody knows. It's only been around for 16 years, and realtors don't even know it exists. That's our fault. When are you going to have that red and white balloon? When are you going to have that commercial where they go, I can't believe it. This person had a $600,000 and I sold them an $840,000 house and they have no payments. We were crying at the closing, and there is tears at these closings, tears of joy. I'm not bullshitting you. I have these closings. There's hugs. There's realtors going, how long has this been available? 16 years. Oh my God. When are we going to, again, we need the players. We need the big initiative. But there's really not that many big players left, and that's a problem.
Couldn't agree more.
It's a war we're losing.
Mutual has acquired the Keller Williams mortgage.
Yes.
Whatever it is.
Yeah.
It's been a little bit cryptic out here on the front line for us, but I've got some Keller Williams friends that run franchises down here that I do those lunch and learns or those breakfast seminars, and that's my presentation every day, right? I mean, if you ain't doing this, you ain't got good sense.
That's right. I never can let any opportunity go by ever without giving a certain individual kudos, because he's one of the greatest human beings that I've ever met in my life. But the person who spearheaded Mutual of Omaha becoming Keller Williams Mortgage is a reverse mortgage absolute legend by the name of Torrey Lawson, who, when he sold his company to Mutual of Omaha, he became part of Mutual of Omaha Corporate, in charge of special projects, merging, because Torrey and his two brothers were not just reverse mortgage experts and legends, but they were also conventional conforming mortgage. And it is Torrey Lawson, who just recently retired, to the dismay of so many mortgage people, because he's touched so many lives, including mine, and made them better. That's Torrey Lawson. So when you mentioned the Keller Williams, I have to say that, again, huge kudos to Torrey, who once again did something staggering, for the mortgage world and now the reverse mortgage world, because MOOM, Mutual of Omaha, is going to bring the purchase reverse mortgage. I think there's 300,000, 400,000 Keller Williams agents?
175 or 80,000, I think, is
all right.
Something in that range. A lot. Okay.
A lot. Yeah.
Yeah.
We got a couple of minutes left. Let's get some finished comments. Jim, you go first. I loved having your perspective on this.
Well, thank you very much for letting me, dominate. I always do. But anyway, for those that are listening out there that are on the fence or undecided, no matter where you fit, I will tell you that as a consumer of the product and as an advocate, there's nothing to be afraid of, right?
That's right.
There's nothing to be afraid of. This thing works, and once it's in place, the closing of a reverse mortgage to buy a house is just step one. Then the real enjoyment in the journey begins.
Very good. Yes,
it really does. So it's not a one and done kind of thing. It's something that continues with you, and the relationship that you have with your borrower is just
it's
I don't
staggering.
think there's any place else in lending that you could do what we do. So I'll just don't be afraid, anybody. Come see us. Come see us.
The number one fear of closing a reverse mortgage in this country, if you really want to be real, would be writer's cramp for signing those 82 pieces of paper. I don't know why we don't do anything about it. John, from the conventional conforming end, I know you and I, you're arranging road shows for me all over the state with title companies in Florida, and I thank you for that. And I guess that's what you and I got to continue to do, to just spread the gospel.
In the absence of something larger, we'll just keep doing it one-on-one, or 20-on-1. Or hopefully bigger. But as I think about this, as we're all getting older, right? I have not experienced the personal benefit. Jim, I'd love write your own testimony for this. And I love when I get to talk to somebody about the power of what it's done for them. It's sharing those stories, right? That I believe, and again, it's on that grassroots level, again, compared to something larger. Education is one of those gaps that we have control over. And my message to loan officers across the spectrum is, if you want to hone your craft and get better about anything, learn, right? Dedicate the time. We have things like YouTube. We have podcasts. We have, right? There's stuff out there.
Sure.
You can learn anything that you want. You can teach yourself on ChatGPT, whatever it is. This is one where I do believe, because of the emotional impact that we create and the ability to, right, change the course of somebody's life at their last days, right, toward however long that is. Hopefully it's 50 years after they move into the house. That is life-changing. I've built a business on referrals because of the things that I've done for 38-year-olds and 27-year-olds and 59-year-olds throughout my life. And the referral capability and the ability to grow your business, coming from somebody who would be even happier with the outcome at 68 years old or 76 years old, I do think is business changing for those of us in this game.
Absolutely.
But we've got to take those steps to get educated and begin partnering with folks who we can also educate. And that's where the change will happen.
All right. Now, Shannon, we got a date already picked out. It's not in front of me for me to come into your world on HECMWorld. Do you remember that date?
I don't right off the top of my head,
That's
but
okay.
I will look, my friend.
That's okay. I have it written down. I'm just in the studio. It's not, and I hope we really can get John McHugh and maybe a couple other people that we talked about, maybe somebody from a major lender, who has the balance statement to make that Remax or Keller Williams commercial. I'd love to write more reverse mortgages every day. I would, but brought up by an old-fashioned father who taught me a rising tide lifts all boats. Mm-hmm. We got to get this message out there. So Jim Davidson is writing a ton more. Yep. Everybody in Mutual Omaha is writing a ton more. Everybody in AP Mortgage, cross country, guaranteed rate. The more people that talk about this, the better we all do. A rising tide lifts all boats. Shannon, it's always great having you here. Your final comments, just until I see you in your world and HECM.
Exactly.
World.
Yeah. This is Shannon, and this is my world.
And welcome to it.
Yeah. Briefly, a comment to John and Jim and you as well, Mike, and then also a comment to consumers that may be watching. So I'll begin with consumers. The reverse mortgage. Ask yourself this question: if you sink every penny of the sale proceeds from your previous home into a new house, are you setting yourself up to be more financially vulnerable? And just kind of stew on that for a while, or are you going to have to tap into qualified retirement accounts and incur a much larger tax liability because you sunk every penny into the new house? And how would you like to sit in the house and wake up in the morning with drinking your coffee and realize I've got no mortgage payments, no principal or interest payments? That's really my message for the consumers. My message for you all is, first of all, I love talking with Jim over the last year plus that we've kind of engaged more, because if you're a reverse mortgage professional watching, listen to what Jim's doing. He's out there at breakfasts. He's doing seminars. He's not hiding behind his computer. Wrote a column on that for salespeople. We can hide behind email campaigns and drip campaigns. Hey, if you're not out there being seen like you and John are, John, you and Mike are going out and seeing people, then you're losing. You have to be top of mind. You have to be building relationships. So my hat's off to all three of you for going out and, pressing the flesh, shaking hands, going to coffees, going to lunches, going to functions. That's where success is. And every single top producing mortgage professional that I know, traditional and reverse, is a relationship builder. They're out there shaking and baking, as I say, and they're doing it consistently. So Those are my thoughts.
All right, and we're going to have all three of you back again soon. I have to be very careful on 62 New Podcast to not make it into a reverse mortgage podcast, because everybody, first of all, the name, You have to be 62 to get a reverse mortgage. When I first started this, everybody thought it was going to be only about reverse mortgages, but it's not. It's about all things retirement, long-term care insurance, annuities, everything that you could possibly need. But we never even touched on the topic, and that'll be our next topic when we all get together, on all the things a reverse mortgage can be used, the traditional, to help people with their long-term care insurance, to fund an annuity. They may be in their 60s, and I know NERMLA's going crazy if anybody from NERMLA watches with me saying that, to fund retirement products and services. So when you get to your 80s, because that's what you're going to live to be, you're safe.
Yeah.
And a reverse mortgage can be used to fund all of those things, and no one talks about that either. But thank you, the three of you, so much. Everybody have a great week, and let's help as many seniors as we can have the highest quality of life. Thank you from 62 Who Knew. Bye-bye.